To everybody who's present, thank you so much for joining in. I'm Kavita Agrawal, the founder of EXP Invest, and you're here with me in the weekly market outlook series from EXP Invest. So in today's session, like every Friday, we will discuss what has unfolded in the market so far and what does that tell us about the weeks coming forward. How the format of the session is going to progress is I will first discuss the Nifty charts with you, then the bank Nifty charts. We'll move on to the Intersector chart. First 30 minutes, 20 to 30 minutes is going to be my presentation. Once that is done, we will move on to question answers. We have the session going on live on multiple social media platforms as well as on Zoom. We have some priority guests with us on Zoom who are our premium members or who have registered for the event from our event page. So if they have questions, we are going to answer their questions, have a chat with them. And then if you have questions, all the other members, make sure you fill the stock request form. And only questions related to analysis or techniques will be answered from the comments. Any stock related queries needs to be asked via the stock request form only. This is the SEBI basically requires us to maintain a record of all the stocks which have been spoken about publicly. So if you want your stock to be discussed, make sure that you do that promptly. Now, I am going to share my screen and we will start with the analysis of Nifty 50. So this is a Nifty 75 minute, but let's move to Nifty 3 minutes. And this is what I want to show you. So this is where the market activity ended today. And this was Friday, Thursday. So this is Monday. As you can see, the first half of the week was pretty choppy. If you're part of my Telegram channel, over there also I mentioned that the Nifty was stuck in a range of 24,450 and on the downside around 24,000 kind of 150. So within that 300 point range, Nifty had spent considerable amount of time. When I say considerable, I simply mean around 8 trading days, which is considerable amount of time, right? However, today we saw a very nice breakout above the level of 24,450. Now, I was personally not expecting it because there were some signals on the charts which were looking mixed, which were looking weak. But then that is the beauty of being hyper focused on long side only swing trading in the stock market, that even though my broader view analysis was not exactly spot on, I was still 100% invested in the market with stop losses at place. All my Trade Together program members were almost 100% invested in the market, again with stop losses in place. So even though during the consolidation, the prices came like really close to the stop losses, it didn't trigger a lot of those stop losses. And today the stocks continue to rally. What you can see here is this 24,400 or 450. That range was the resistance. Today we broke above that. And here in the meanwhile, on the 3-minute time frame itself, when the consolidation was going on, a small negative divergence was forged. Now, what was concerning me earlier were these 2 points that I have circled, because here the 3-minute time frame broke below the level of 30. So that is why I was expecting that more weakness could come. But then the 3-minute time frame is a very weak time frame. So we'll move on to the 15-minute time frame for a little bit more assessment. Now, the 15-minute time frame also showed a negative divergence, but then this negative divergence basically pretty much got realized when the Nifty gave a pretty sharp correction on the day of Wednesday, that was 10th of July. It tanked nearly 250 points or more from the peak. From one resistance to the very next support, came down, but then since then it has started to recover. So this was actually a pretty good breather, we can say, in the market, a breather which the market really needed to take, unleash into the next leg of upside. This leg of upside has actually seen some really strong participation, especially in the IT sector. Coming to the 75-minute time frame, now this white line that you're seeing here, this white line is telling us very clearly that the 75-minute time frame has moved into a very bullish range. The RSI of the 75-minute time frame has moved into a very bullish range. And as such, we can expect the market rally to continue. Here, a slight negative divergence again was seen, but that negative divergence again fizzled out when the RSI of 75-minute time frame itself came down to test the level of 50. Had this level of 50 on the RSI been breached, then I would have been a little more aggressive in booking my profits. But since the support of 24,250 and the level of 50 was holding on the RSI pretty well, I had an inkling that even if things don't look as strong as they did a few days back, maybe this is just not the beginning of all hell breaking loose. Moving on to the daily time frame. So on the daily time frame, what is very evident is that the momentum strength that we had experienced up to 15th of June is not something that has yet returned to market. Though we can say that since the 4th of June fiasco, that kind of momentum has been trying to return to the market, but not quite there yet. However, the correctionary consolidation that we saw. So when the underlying trend in a stock is very strong, the correction may necessarily not be downward sloping. Correction may simply happen in the form of a sideways or even an upward tilting consolidation format when the momentum is very strong. And if you look at the past, the momentum in Nifty has been pretty incredible. So what I believe is that this correction that we saw was actually all that built up, you can say, built up energy that the market had not been able to let go of because of this frustrating consolidation phase, right? But after this was a major shakeout, a lot of weak hands left. In fact, a lot of people who got stopped out of the market and did not enter the market are still waiting for a market correction, which is just not in sight. Since this low market has rallied like 3,000 points, and those people, poor people, still continue to wait for a market correction. This is not the kind of market that you want to wait for a correction in. This is the kind of market that you want to participate in. But then again, you have to be very stock specific. At this point in the market, there's a lot of sectoral churn that's going on. We'll come to that in just a minute. So what I'm going to do is I will move on to the bank Nifty chart and we'll do some objective analysis there as well. So this is the bank Nifty chart, and here again you can see all my trend lines and you can see very sharp rally has been witnessed. Here the resistance that I had around 53,000 had been tested, and the 20 EMA has also been tested on the 75-minute time frame. With that comes with the realization of this negative divergence that had been forged right here. So if I just hide this one so you can focus a little better, if you will notice, this is a higher high on the price and this is a lower high on the RSI, creating a negative divergence. And we saw this correction. Previous low was breached, sure, but the 20 EMA has acted as pretty strong support. And again, if you see this white line, it's marking the support zone of this bull range. So we can see we've come to the support zone of this bull range and we can expect continuation of rally. Now, with respect to the bank Nifty index, again, I am looking at the banking stocks, but I'm not getting a lot of confidence. Just to digress a little bit, I want to look at the HDFC Bank here, and you can see this strong rally that unfolded here. This rally that unfolded, I'm not very convinced with the volume profile that I'm able to observe. In fact, the volume really picked up when the price started to correct. So my comfort level with the banking sector as such is not very high. I am in fact more inclined towards, say, the IT sector or the chemical sector when it comes to making fresh positions. But I think banks have already given quite a bit of a run up, and they are close to very important resistance zones if you study on the weekly time frame, and they seem to be struggling. So until and unless this key resistance is either breached or a major correction happens and key support level is retested, I will not be venturing into banking stocks for now, with, of course, few exceptions there. So with that, let's move on to our favorite intersector analysis. Things have changed. So on Zoom, Mohit says that IT sector is at all-time high. Do you still believe we can enter it, especially after today's upward movement? So Mohit, you probably are a member of the Trade Together program. So in the Trade Together program, you'll see we had recommendations in stocks like Infosys and Wipro. There's another stock that we've been trying to get into, but we're getting stopped out. So I'm waiting for a bit of confirmation to get back in there. So IT sector being strong, IT sector is at lifetime high right now. But members of the Trade Together program of my services and even my viewers have known that a rally in the IT sector is to be expected, and they've been advised accordingly. So with me, my philosophy is very simple. I don't want to chase missed trains and I want to enter stocks before they rally. Analysis is a great way to do that. And look at this IT sector. So index line right here. So I'm going to try to make this a little bit more prominent by increasing the thickness. And you can see what a fantabulous recovery it has given since like yesterday itself. The entire week it declined, came dangerously close to the stop loss levels, but then today gave a very good recovery, almost 3% jump in the index, and the same was also witnessed in the stocks. Now, from an overall perspective, the Nifty 500 index, which we're using as a benchmark to study all the other indices, we can see it has not given a lot of movement. It's been like 0.8% up, whereas healthcare, pharma, and IT have massively outperformed. FMCG is also one sector where I'm seeing some outperformance, but I don't trust that rally to last too long. I think there is a segment of the market which is feeling very skeptical about this rally that is unfolding. So they are running to FMCG stocks. So I think from a short-term perspective, the rally is pretty good. Fresh entry is not recommended, but it is not where I would be taking bets on. PSE stocks, the PSE sector, again, like I said, previous 2 weeks also, selective bet, buy on dips, but don't be overconfident because the rally has to quite an extent already been exhausted, and entering now means that your risk reward ratio is not just unfavorable, but the ratio of risk to reward is significantly higher. So you don't want to take that risk yet. IT, pharma, healthcare, I think lots of opportunities. The energy sector is coming out of a slumber, so I'm pretty excited for that. We have some energy stocks in our recommendation right now. Today, in fact, IOC gave a dividend and gap down. That gap down has freaked out people, but I just want to remind you guys that when a company issues dividend to its shareholders, the stock prices are adjusted to avoid a double gain. A lot of people don't know this and they panic a lot when they see the big gap down in price. It's not that. Okay. Consumption, infra. So infra and realty. I think in reality, some of the stocks which have already given pretty good rally, have taken a dip and are preparing for next legs of rally, which is good. But in infra, I am seeing signs of exhaustion, and I think the infra stocks you should be a little bit more careful of your infra holdings. It can go into consolidation or some correction. I'm not saying that it might be the bottom, because I think for the next 10-15 years infra is definitely a very attractive sector from a long term perspective. My advice is more, my analysis is, or my comments are more from the short term perspective. I think infra is heading towards some exhaustion. Let's see. Auto sector also, I think something is brewing there. I wanted to make a position in Maruti, but I really missed that because it's like at night I had set an alert in a order to enter, but then the next morning it opened with a small gap up and then started to rally strongly. Not today, but earlier this week. So I missed out on that. But then I am still holding Bajaj Auto and I'm pretty hopeful that it's going to do good. Metal, I think, is a bit of a disappointer this week. I was hoping to see some better performance there, but metal is taking a little bit of a setback. However, I will keep an eye out on metal because it has a tendency to give pretty good, strong momentum rallies. And as soon as the momentum gets confirmed, we will re-enter the metal sector. So that's the sectors part for you. Now, going back to the chart of Nifty. Today, I want to discuss with you, we still have 10 minutes left. So today I want to discuss with you how to gauge the market mood and how to determine where the market is going to go next using price action and RSI analysis. So I'm going to hide this volume chart. It doesn't really play a major role when you're looking at indices. But with respect to indices, it's very important, or any stock for that matter, to first identify the trend direction, starting with the largest time frame possible. So I like to do this on the 5-week or the weekly time frame. Take the largest charts and draw my trend lines, and the trend lines will always be drawn using the most prominent peaks or bottoms. So I'm going to increase the brightness of my line so you can have slightly better visibility. And don't worry, everything is very zoomed out right now, and that is on purpose because we only want the broad view. So what I've done is I've used these two prominent bottoms of the 2020 and the 2008 bottoms, and using those two bottoms, and I'm now cloning my trend lines to and placing those trend lines on other key peaks and bottoms within the price action to basically identify internal trend zones. So I will cover as many points as I can on the weekly time frame, and then I'm going to move down to the smaller time frames like daily or 75-minute to get a more precise placement for the same trend lines. Now I'm not a big fan of using multiple trend lines of different slopes, because I think when you overuse trend lines, important as they may be, they can lead to biases in your analysis, which you want to avoid. So I can see that this trend line, which is passing through this peak right here, this is quite important. And I think going forward, this trend line is going to act as a very important resistance zone. So I'm going to take this resistance line and I'm going to draw one that intersects with this trend line. So this is around 25,000. Wow. So I like to keep it rounded to 25 points. So 25,000 seems to be a very likely target for this rally that is unfolding. That's another 2% of rally on the broad market. And if we play this right, this 2% rally in the broad market can be converted to 6% growth in the portfolio stock selection is correct. The 75-minute time frame is suggesting very strong momentum continuing in the market. So I would expect at least one more leg of rally. And like I said, this was the beginning of the new rally. So this looks like the entire wave one. This consolidation was like wave two, if you're talking from an elite wave perspective. So this was like wave one. This correction was like, this was like some consolidation here too. This is three. I think three is still unfolding. So we might actually even go above 25,000. I definitely expect that. My belief is, like I say every week, golden goose India for the next 15 years. So make sure that you're staying invested in the market. Also, what I would like to do here, see, this was an anomaly. This 4th of June excess sentimentality, this kind of broke the charts. But then you have to understand, so when I do my analysis, I don't like to consider this part of the price activity, and I also don't like to consider this part of the price activity. So from my perspective, this is how the chart basically looks like. This is the fair chart. So this part and this part I don't consider, because I think this was caused by euphorism and this was pessimism, and I don't want to consider those two. So that's a little bit of extra nugget for you guys. So these are the trend lines, and within this also, like now that we're on the 15-minute time frame, if you want, you can also draw trend lines within these internal peaks. But then again, using too many trend lines is just going to mess up your charts. But if you do use those trend lines, if you do draw them in the past activity, you might see some overlapping interactions there. So like for instance here, the internal trend lines that I have just drawn, these ones, you see how well they interact with the price activity in the past. Naturally, if they are interacting with price activity in the past, it means that if these points themselves were used to project the trend lines, they would have acted as very good resistance and potential support zones in the future or in the present as well. That is basically the advantage of using this cloning methodology. But again, I am going to just remove these internal trend lines because I don't want to have a micro focus on the price activity. I want to look at it from a kind of a bird's eye perspective. With that, my analysis or my presentation concludes, and we will open the dais for questions. So to all our Zoom participants, if you have a question, if you'd like to come off mute, simply raise your hand and you can ask your questions. We will go one by one.
Am I audible?
Yes, you are audible.
Hello. So Kavita, my investments are in small cap index. So I usually track small cap index. I have been observing recently, small cap has been giving a huge upward or downward movement on 3-minute charts. So basically, today itself, it gave 4 times, it gave 100 points down movement, and then 100, obviously, vice versa direction on 3-minute time frames. So I wanted to understand, what does this signify? Does it signify sitting or some signs of exhaustion, or how do you see these type of movements when there are very sharp movement on smaller time frames? So in my mind, it feels like that a lot of manipulation is being done on maybe options level or something like that. Trying to understand, how do you look at it?
Absolutely. See, when it comes to small cap versus mid cap, sure, there is a risk of higher risk of manipulation with small cap stocks because it's easier to control something that is smaller in size. That being said, you have to understand that when you say it's higher volatility, you're obviously comparing it with something, probably the broad market, the Nifty 50. Now, understand that small cap stocks or even the small cap index is a way more high beta investment tool, or it's way more high beta. The components of the small cap index are obviously small cap stocks which have extremely high beta. So in small cap stocks, it's not very uncommon to see 10, 15, 20% movements in a day, but that is not the case with, or back to back circuits for that matter, but that's not the case with large cap stocks. So when you're operating with a small cap stock, your beta is already pretty high, so they do have a tendency to move significantly faster. So the advanced swing trade training program that I do over there, one thing that I always teach my participants is how to identify a stock's personality, because a stock can be a fast mover, slow mover, it can be a stock strong, it can be a super trend, it can be a momentum mover. So typically the large cap stocks fall in the category of being slow movers and momentum movers, in the sense that they move slowly, they may cover maybe 15% in 2 months, 3 months, versus in small cap stocks, your what I like to call the ATR per day, the average true range per day of the top. I like to calculate the average true range of the stocks for the certain top quartile. And here, if you see, the ATR itself is 1.59%. So when you're looking at any stock or index, it's always better to look at them in a percentage format rather than in a points format, first of all. So you'll see the ATR for small cap stocks is 1.6 approximately. And if I change that to Nifty, for Nifty is 1, right? So it is already 1.5x more bigger range there. So naturally you're seeing bigger movement. And as far as manipulation or sign of exhaustion is considered, you cannot predict that from something like a range of movement on a 3-minute time. The analysis of the 3-minute time frame is only enough to predict the next few hours, maybe, because it's a very small week time frame. Thanks, Mohit. So we will move on. We have Rajat also, and he wants view on. Let's take a look at RHIM, RHI Magnesita India. I don't think I've studied this stock before. So let's see. So on the weekly time frame, I have studied the stock probably in the live session itself, and I can see that it respects the trend lines really well. Right now, it has again taken resistance and is trying to come back down. So the stock is definitely in a downtrend for the time being. On the weekly, what I'm seeing is that it has also broken below the level of 30, which is a sign that more correction can come. So the next support that is coming up on the stock is around the level of 504. But if that gets breached, then you can expect the stock to fall further to maybe 320. This is not looking very promising to me. When the daily time frame looks pretty negative, the RSI is in negative range, level of 30 has been breached. 75-minute is also looking very bearish. So this is a sell on high kind of a stock. So if you're holding the stock, I would suggest just rip off the band-aid, get out of it for the time being. Next question, Sahil again on Zoom is asking how to decide entry in stock that has already moved up. So Sahil, what do you do when you miss a bus or a train? You don't try to get on the running bus, you wait for it to come to the next stop. So wait for the stock to take a rest, take a dip, come to the next support, and then re-enter with a stop loss in place. Because again, it's important to assess whether the stock has more upside left or whether you're entering the stock at a top. From a swing trader's perspective, you can either enter stocks after end of a bear trend or within a bull trend, but during a dip. Different strategies need to be exercised for them. Entering a stock takes a lot of effort analysis. Like I always tell people that analysis takes 90% of the time and is more than 90% of the effort versus execution, which should be only 10% of your activity. That too, including the maintenance of your trade tracker, which is a larger chunk. But I see most people spending 40, 50, 60% of their time in just executing trades and doing very little analysis. That is inevitably going to lead to over trading or revenge trading for you. Cochin Shipyard. Let's take a look at Cochin Shipyard for very strong stock. I'm going to need the volumes now. So let's bring back the volumes. Reset. Don't mind the charts a little bit messy because ongoing analysis. I think very strong rallies unfolding. The RSI is extremely overbought and continues to signify strength. No negative divergences here. The volume activity also has been pretty strong. So even though the stock has rallied insanely, like since, if you see, since the beginning of just 2024, the stock has rallied for almost 4x, and still on the upside, the volume pickup is quite strong. That means we can expect more activity here. So what is the exit strategy? Right now, there is none in view. What I would suggest is keep holding Cochin Ship and keep trailing your stop losses. So let's take a look at, we have Priya Junjunwala, and she's asking us that suppose I have over 100% return on a particular stock. Should I exit and enter some other stock or continue holding? So it's not a good idea to exit a stock that is especially giving you multi-bagger. Think of it like this, that you have a garden, and when you decide to exit the most profitable stocks, you're basically talking about chopping down the most fruitful tree in your garden. You don't want to do that. Instead, what I would suggest is keep trailing your stop loss. And if you don't know how to set your stop loss, then stay associated with a research analyst and have them review your portfolio maybe every quarter or so. It's very important to keep that view. And every quarter, if nothing is triggered, so they'll give you key stop loss levels that you should maintain, and you should maintain that. Because if you have lots of unrealized profit, but if the stock tops out and you don't book those profits or don't exit them while it's still pretty high, you're going to lose all that unrealized profit. It's no use. So don't think about churning it. Just think about protecting your unrealized profit and let it grow at the same time. For Sahil, let's take a look at Swiss Military Consumer Goods. Extremely illiquid stock and not something I would recommend you to participate in. I think someone had asked this stock last time also. And you can see the ATR is like 4.5. So extremely volatile stock, extremely illiquid stock, which means your cost of participation or cost of trading in the stock is also going to be quite high. If you want, the underlying trend does look strong and the volume participation on the upside looks strong. The stock is currently at 100 EMA. You can continue to hold the stock, and if you do, please make sure you don't allocate more than 1% of your total portfolio in a stock. And let's also take a look at LTIM. So LTIM is actually very interesting and a stock that I am following very closely. Simple reason being that I like the business, I like the company, I like the management, and currently the stock is available at a pretty subdued prices. So it declined 50% and then started a fresh new rally, started creating higher highs and higher lows. And here I think the stock has taken this is the Fibonacci, and here we can see the stock has taken a 78.6% retracement exactly against the previous leg of rally and started to rally again. So I think this is a very good example of a stock which is showing strong RSI positive divergence on the daily time frame, very good rally unfolding with strong volume pickup as the price continues to rally. So this is a very good example of a stock that you should keep your eyes out from a buy on dips perspective. Today, in fact, the stock has achieved one of my targets, and on the 75-minute time frame is also showing a little bit of a negative divergence, so I wouldn't make too much out of it. Now, I am waiting for the level of around 5,200 to get retested on the stock, because that is, I think, where a nice little entry possibility can come. And for those who are holding the stock right now, naturally, you need to maintain stop loss. Now, if you are holding the stock from a long-term perspective, then in that case, your stop loss should be around the level of 5,100. But if you're holding the stock from a short-term perspective, then from a short-term perspective, the short-term target has just been achieved. So your stop loss should be a lot tighter. So I would suggest that if the stock falls or starts to go below T, then you should exit the stock. So Sahil, that's for you. So we have a query from Meghraj. He's asking how much ROI is good in a month. It's not possible to fix that. The return in market is you have to judge that against the context of the market. Because what is your best alternative? That in the market, you put all your money in a passive fund, which is governed basis the constituents of a broad index like Nifty 50, right? And you earn money passively. So if you're doing active trading in the market from a short-term perspective, you need to make sure that you're beating the market. So your benchmark is actually the Nifty 50. So every month or month on month for many years, you need to try to beat the Nifty 50, which is the next best alternative for you, Nifty 50's performance. And that is the best barometer for your own performance. So next for Kunal on Zoom, let's take a look at a pipe company. Let's copy this. And just a reminder to the Zoom members, you can also raise your hand and you can also come off mute and ask questions. So I'll just type it in. Om industry. Let's see. So this is again very volatile. There was a negative divergence here, but the volume has been pretty good on the upside. Downside, didn't see some volume, but the volume activity has also started to come up. Not a very, since I don't know the fundamentals of the stock, I cannot really comment from that angle. But what I can see is that this entire rally has been retraced by around 23 to 20, 30, 38 percentage. So this naturally becomes an important support zone. But why this? I see this tiny little peak that it's probably gone for. And then here again, this is also a base. So this has been broken above, which is also the 250 EMA on the daily time frame. And it has sustained above it, but it is again starting to take some resistance from here. Considering the underlying price activity, so this is definitely a strong resistance zone. See, if this stock, if you're holding the stock from short-term perspective, it has created a range around here, 15% range. So if you're holding for short-term and if the stock falls below, you can exit and re-enter again around 540, right? But if you are holding from, say, a long-term perspective, in that situation, you should maintain your stop loss at around 500. Now, here back, like basically in the June volatility, the stop loss would have been triggered, but then that's true for almost pretty much every stock. And that's also the purpose of the stop losses, to protect against such market anomalies. And that is also why you need to constantly monitor your portfolio, not get complacent like in the case of FTs, because re-entries did save a lot of from getting wasted. I am not able to really get a lot of clarity for in this stock from a long-term perspective, but yes, it does look attractive short term, in the short term. But then this is very important resistance. I'll be able to give more comments only once the stock has sustained above the level of 650 or 660, and then we can talk again. Now let's take a look at the stock request form. And I will again remind all our attendees that if you are not a Zoom participant, you will need to fill up the stock request form, which has already been shared. I'm sharing the same right now. And if you want to be a more integral part of my community and to connect with me, I invite you to join my Telegram channel. It's pretty easy to join my Telegram channel. You can either click on the link which is being shared with you in the comments, or you can go into Telegram and you can write Trade with Kavita and join this channel with around 6,900 members and this DP. Now there is a catch. When you write Trade with Kavita, you're going to see lots of other channels. These are fake channels. So make sure you don't end up joining anything with a variation in the channel name. And when you look at the channel, you'll see posts about my market comments and my webinars and my stock ideas, sanitized versions. Obviously, you'll be seeing those and you'll see these daily quizzes. The whole aim is that if you connect with me and join my community, I want to bit by bit elevate your own understanding of the market as I polish my own understanding of the market. Right? So please do join my Telegram community and also see if you like technical analysis related deep content. This is not beginner level stuff. This is obviously very advanced things that I discuss. If you're interested in learning more, then you're welcome to also follow me on YouTube. So you can just search my name, Kavita Agrawal, CMT CFA, and my YouTube channel will pop up right in front of you. Make sure that you subscribe and also turn on the bell icon so that we can stay connected. All right, let's now move on to the stock request form. So today is the 12th, and we can see in the live session, since the live session has started, Mayank Mundra has been the first one to ask his query. So we are going to look at BEL for Mayank now. Where can I see this by the end of the month? That's very hard to Mayank. That's not how technical analysis works. But from a short-term perspective, I'm going to try to help you out. So see, this is what I'm talking about. In this PSE stock, I'm not comfortable with, number one, this negative divergence on the daily time frame. Two, this massive volume against this massive selling on the 4th of June. Three, the volume pickup on this upside has been pretty sad. The volume did come up a little bit only when this trend line that you're seeing here, that I've taken for you, when this trend line broke, only then some volume pickup has come, which is good, but then it doesn't really make me feel very confident. So my approach here would be simply to maintain a trailing stop loss. Keeping aside this low, I will actually look at, because BEL is also a very strong trending stock, so I don't want to by mistake suffocate it by keeping a very tight stop loss. So I will recommend you maintain a stop loss at around 311.80 rupees. And on the upside, where is the target most likely to be expected? Now, BEL is an extremely strong trender. So I'm going to make an exception, and I'm actually going to try to map out this channel of the stock, which also it has already broken. So we're going to clone this and we're going to place this there, right, to get an idea of a potential. So if this channel sustains going down back to the 75-minute time frame, so if this channel here that we have drawn, if this sustains, right, I would say this entire range is still a possibility, not something that actually, if you see here, the 75-minute and everything looks pretty strong. So with the stop loss that I've suggested you, fresh entry can also be made here, because see, the volume pickup also on this last leg of rally has been good. But again, I would wait for the stock to maybe come down to 325, which is like very close to the CMP. But the potential upside is still pretty big on BEL. So I would suggest you continue to hold on to the stock. For Varun, let's take a look at Midhan setting. I can see strong volume pickups. And then if I have to assess the trend line, I want to use the peaks for this one, and then clone to cover a few more ranges. Very volatile. I can see the stock is like really volatile, lots of spiky movement. But from a short-term perspective, honestly, there is a negative divergence on the RSI. Even though the volume is very strong, I wouldn't be very excited to buy the stock at this stage, because the potential upside is just 13%, but the stop loss that you'd have to maintain is around 457, also around 13%. So the risk reward ratio is not attractive. But if you are already holding the stock, then you should continue to hold with the same stop loss I've just mentioned. So Kunal, you're funny. But this is a big problem, that when you buy stocks, it goes down, and when you sell stocks, it goes up. That typically happens when we are reacting to price action rather than trapping the price action. If you're buying a stock because you think it has rallied and it can rally more, you will most likely experience the downside activity of it, because when you breathe in, you've got to breathe out before you can breathe back in. Same way with the market. And when you sell, so you're probably selling in the market from a perspective of fear. That is, I've already lost so much capital, I don't want to lose more capital, which is not a wrong mindset. But then if your entry is wrong, then it just cascades down to everything else. First of all, stop reacting to the market and start studying the market and predicting it. If you don't have the time, the bandwidth, or the skill set to do it, just associate with a research analyst and let them do the hard work while you enjoy the gains. Now, taking a look at DCB Bank for Raj on the stock request form. So I can see DCB is experiencing strong resistance from this trend line here. And weekly time frame volume activity, it is there, but is it something that I would want to have in my portfolio? So taking a brief look at the range shift, negative range shift was very prominent. Then the stock moved into positive range shift after breaking out of the consolidation zone, or what we call a higher high, forging higher highs. And right now it seems to be in a bit of a mixed zone. Why I call a mixed zone? Because on the downside it's respecting 40, on the upside it's also respecting the level of 60. So 60 is a resistance zone of the bear market. So it's not really giving me a lot of confidence right now. And this kind of consolidation is what I try to avoid in the market, because as a swing trader you need to participate where there's strong momentum. Typically when you participate in stocks which are doing a lot of zigzag movements, see, if you can manage to capture lows and highs, you'll be in a good place. But from a realistic perspective, understand that you'll be lucky if you're able to capture more than 30% or 33%, one third of a trend. Why? Because we lose significant amount of value when we enter, and we also exit late, right? Which means that your entry and exit levels will be like pretty close to each other. And that can lead to high turnover, that can lead to over trading, higher costs, very low profits, and most importantly, opportunity cost. So DCB is not something I would prefer to go for right now. So let's take a look at In Hotel. Mohit, would you actually like to come off mute and ask your question? I think your question is really good.
Yeah, I was looking at this stock, and I think back to back I have made long entries. Last time I believed I have entered at a good price, and I got in a corrective. I got caught in a corrective wave, and then I booked small loss, and then I actually rebought again. I think my buying level was 618. But since then it has been retracing again. I thought price might be, so basically I thought it's a fourth wave on the motive side rather than, but right now I think like it's in the corrective wave.
So can I just ask you, what time frame are you using to analyze In Hotel or Indian Hotels?
I think I was looking at on daily time frame.
See, from a broad trend perspective, right, Indian Hotel is in a very strong bull trend, and I personally expect that this strong bull trend is going to continue. But when you purchase a strong trending stock like Indian Hotel, especially from a short-term perspective, you need to take care of a couple of things. Number one, don't enter these stocks when they have already rallied. So you said you entered the stock at around 618.19. So just look at what the stock has done in just the previous, say, 6 months time. It has rallied almost 70%. So you're buying the stock at a 70%, and you also need to take a look at the RSI or the volume analysis, what it's suggesting. So if you look at, say, has been forging negative divergences since 5th April. Now, this negative divergence has been realized when it has been realized on the 3rd of June, basically when this bottom was created on the activity, right? And then the recovery.
Sorry to interrupt you. We will be looking at these analyses in our
class. Of course, this is what the class is going to be all about. And then you see this bottom that was forged on the 3rd of June. What a beautiful positive divergence occurred on the 75-minute time frame. So when you're trading in a stock, even from a short-term perspective, a stock, the best stocks to trade in for short-term perspective is to identify first that they have a strong underlying trend on the daily time frame, and then buy the dip, sell the highs in those stocks. So in this kind of a stock, what I like to do is establish first strong bull trend on the daily time frame, come to the 75-minute time frame, look for good entry point on the basis of strong RSI positive divergence, volume pickup, or higher high formation, and then use a 15-minute time frame to plan my exit. So suppose, sure, many people might not have been able to purchase the stock on 521. Very few would have. Right? Next opportunity to enter the stock would have been where the stock would have established a higher high. So basically somewhere over here. So this was the previous high around 570. Anywhere in this window, you could have taken an entry. After that, you have to wait. You have to wait for another opportunity. How do you know another opportunity has come? Price has taken a correction. It has come to the 20 EMA, maybe going close to the 100 EMA. And on the 75-minute time frame, is it close to the support of the range shift? So it is in a positive range, clearly. Here it entered the negative range slightly. I will be teaching you range shift study analysis, of course. It has come down here. Fine. Go down to the 15-minute time frame. Is it giving positive signals on the 15-minute time frame? Yes, it has started to show a positive divergence on the 15-minute time frame, which means now you can again start potentially participating in the stock for more legs of rally. What I mean by more legs of rally, if I have to project if I have to compare to the previous rally, basically this part of the rally was this part of the rally, which is gone. Now this is what is unfolding on the chart, and this is where you're entering. So your expectation also should be according to that okay, a rally which is, say, unfolding on the daily time frame, first leg of the rally is gone, maybe the second or the third leg of the rally is left. That is what I want to do. And my trend line that I have drawn here just while talking to you is giving me a potential target zone to look out for. So 815 would be my target for Indian Hotel. So when you're trading in stocks, even strong stocks like Indian Hotel, make sure you're not reactively trading there.
Actually, I did react to the price. Like, I believe that, okay, so 6-7 days back, we had a green candle. I bought it on that price, close to our today, like this green candle.
There's so many green candles.
Sorry, 4-5 days ago, this green candle on the right hand side.
This one, 14th June, 20th June.
Sorry, just a moment.
See, it doesn't matter, Mohit. It doesn't matter. What matters is, see, you never make decisions on the basis of one single candlestick. It takes a lot of analysis. So in the training program, you learn all about that, how to look at things in a more holistic manner, because in the market, there are lots of moving parts. So you have to take care of all of them. So keeping a very myopic view of either pattern or indicator or candlestick is not enough. You need to look at everything. Kunal, you want a book recommendation for trading mindset or to get rid of fears about the market in general? You can study books related to behavioral finance. There is no one specific book that I can suggest, but eliminating fear in the market is you have to, in a very binary manner. There are only 3 things that the market can do at any point of time. It can go side, up, or down. You just have to plan for what are you going to do in any of those situations for your active holdings. And if you don't have active holdings, if you're sitting on cash, then for the positions that you want to make, you need to understand market structure or chart structure, price action. And on the basis of that, plan your trades. Think of it like this. If you're a fisherman and if you know that in a pond there is a certain side of the pond where you can get a lot of fish, doesn't mean that if you put a net there you're going to be able to catch every eligible fish in the pond in that corner. That is not how it works. So don't have that expectation from the market also. Set up your orders, study the broad market structure, and then let your orders get triggered. Let the price come into your trade setup rather than you compromising or setup or your risk reward ratio to create positions in the market. So Mr. NK is asking for iRadar. So let's take a look at iRadar. iRadar, undoubtedly very strong rally unfolding. Very attractive stock, obviously from long-term perspective. Short-term entry right now is not suggested at all. I believe the short-term target on the stock is 300. Volume pickup is very good, but again, like I said, I wouldn't recommend an entry. Yes, if the stock comes down to maybe 250 to 55, there you can attempt an entry with a stop loss at 229. Not right now. Exide industry. So Exide, of course, very attractive from long term. So just let's remove the drawings and let's reassess the movements. So I can see this strong trend in the stock, and for some time it went into consolidation, which was actually year long, and now it has just come out of consolidation here. It has just started to rally. From a short term perspective, if you're looking at it from a days or weeks perspective, you think, oh, Exide has rallied so much, it's gone out already 3x. But if you look at the broad trend, here Exide rallied 13x, no, 136x in a matter of around 20 years, 2001 to up to 2018. In 18 years, it went that way. And then it took a little bit of correction. Come on, 60% correction is nothing for a stock that has rallied so much. Point wise itself, if you see, the stock went up from 1 rupee to 284 and then came down a little bit, continuing to rally. This is just the beginning. In fact, a higher high breakout occurred just here. What a nice little breakout it gave. Here it gave a breakout. Here it gave a pullback and then again started to rally with fabulous volumes, and the volume pickup continues. But on the daily time frame, I'm seeing some negative divergence, which means obviously itna strong rally then it'll expect a little bit of exhaustion. So that exhaustion seems to be setting in. 75-minute also corroborates my view. Here also I can see range shift unfolding and the stock basically seeking some respite from the massive rally it has given. So I would wait for the stock to come back down to this previous peak, take a 15% correction to around 8 levels before I plan for fresh entry. What to do if you have existing position? Luckily, the stock has not crossed the level which I would say your stop loss has been missed. I think you should set a stop loss right below the level of 546. Right, so 546 is where your stop loss should be, and potential re-entry zone would be here in the range of 476. Obviously doesn't mean that blindly enter when that range comes. When that range comes, so I am setting a alert at the level 8 that it's potential entry. The white triangle will tell me that okay, we are close to the potential entry zone. I will come back, I will reassess, and then I will take a call whether I want to buy Exide industry based on the broad market circumstances at the time. So I am thirsty now. So with that, we come to the end of today's session. Thank you so much for being a great audience. I appreciate you taking the time to attend this live Market Outlook series. I will see you again on Wednesday in the Let's Get Technical series. Don't forget to join my Telegram channel to know more about how I can help you out in your stock market journey. Thank you so much for joining.